This presentation is for Chapter 7, Master Budgets. In Part 1 of Learning Objective 3, we will learn how to prepare an operating budget for a manufacturing company. So this slide shows all of the budgets that are included in the operating budgets for the master budget, and we will be learning how to prepare each one of these. This slide shows the balance sheet for Smart Touch Learning for the year ending December 31st, 2026. So some of the data that will be used to prepare the master budget will come from the actual balance sheet for the prior period. The first budget that is completed is the sales budget, and the reason why is it estimates the amount of sales revenue, but it's also the cornerstone of the master budget because the level of sales affects production expenses and almost all other elements of the master budget. So budgeted total sales for each product will be equal to the sales price multiplied by the expected number of units sold. So it would be up to the sales and marketing teams at Smart Touch Learning to project the number of tablet computers that they expect the company to sell in each of the quarters for the next year. In this slide, we can see that they have projected that in the first quarter, Smart Touch Learning will sell 500 tablets, and then the sales will increase by 50 tablets over the next 3 quarters. So the first quarter, 500 tablets will be sold, second quarter 550, third quarter 600, and fourth quarter 650. You would add all of those quarters together to get total number of tablets to be sold, 2,300, and then we can determine the total revenue for each quarter by multiplying the number of tablets to be sold by the sales price per tablet of $500. So we can see the total sales for the first, second, third, and fourth quarters, and we can see the total sales for the year of $1,150,000. That amount will be used to complete the budgeted income statement. The quantity of the sales to be sold will be used to determine the production needs for the future. After the sales budget has been completed, the next budget to be completed is the production budget. So the production budget is going to determine the number of tablets to be produced during the year, and it becomes the basis for the production cost budget. The cost of the direct materials, direct labor, and manufacturing overhead. Also, we use that information to complete the cost of goods sold budget. So let's look at how we calculate the number of tablets to be produced. First, we start out with the budgeted tablets to be sold from the sales budget. Then we're going to add to that the number of tablets that management wants to have in the ending inventory. So remember that Smart Touch Learning doesn't want to end the period with zero inventory. It wants to have enough tablets on hand to begin the next period. So when companies are deciding on that ending inventory, they want to have enough on hand, but they don't want to have too much inventory on hand, because if you have too much inventory, that will increase your inventory cost, including the storage and the insurance, and also it could make a potential for your inventory to become obsolete. After you determine the desired ending inventory, you add that to the budgeted tablets to be sold. That gives you your total tablets needed. But remember, we will have some tablets in beginning inventory. Our ending inventory for one quarter becomes our beginning inventory for the next quarter. So those tablets are already in finished goods. So we will subtract the number of tablets that are in finished goods inventory from the total tablets needed, and that will give us our budgeted tablets to be produced during that quarter. Okay, so this slide shows us how to calculate the desired ending inventory. So if management decides that they want to have on hand 20% of the next quarter's sales at the end of the previous quarter, we're going to go to the second quarter for Smart Touch Learning, where they projected they would sell 550 tablets. We're going to multiply that by 20%, and we're going to make sure that we have at least 110 tablets on hand at the end of the first quarter, and that will become the beginning of the second quarter, so that we have enough tablets to sell to our customers. We're going to use that same method for the second and the third quarter. For the second quarter, we use the third quarter sales. For the third quarter, we use the fourth quarter sales. But for the fourth quarter, we would have to have a projection of the number of tablets that will be sold in the first quarter of 2028, or the next year. That will be given to us. It says that they will sell 50 more tablets, or 700, and we would multiply that by 20%. So at the end of the fourth quarter, we need to have 140 tablets in ending inventory. This is the completed production budget for Smart Touch Learning for 2027, and we're going to look at this budget and see how it was completed. The first line, budgeted tablets to be sold, would come directly from the sales budget. That's why you do your sales budget first. The second line, the desired tablets in ending inventory, we have to calculate those amounts. How did we calculate those? For the first quarter, we took the second quarter sales, 550, and management desired to have on hand 20% of the second quarter sales in ending inventory. So 20% of 550 is 110. We did that for the second quarter using the third quarter sales. The third quarter sales were 600. 20% of that is 120. For the third quarter, you use the fourth quarter. 20% of 650 is 130, and then if you remember, we calculated the 140 using the first quarter of 2028, which was 700, and 20% of that is 140. After we have determined the desired ending inventory for all 4 quarters, we add that to the budgeted tablets to be sold. So we add those together and we get total tablets needed. So in the first quarter, we would add 500 tablets to be sold plus 110 tablets desired in ending inventory, and we would get total tablets needed of 610. We would do that for the second, third, and fourth quarters. Just add those amounts together. Then we need to subtract the tablets that are already in beginning inventory. The problem will have to tell you the number of tablets that are on hand in beginning inventory for the first quarter. So the 200 tablets would have to be told to you in the problem. But for the second quarter, we know the number of tablets that would be in beginning inventory because they would be the number of tablets that are in ending inventory for the first quarter. So the beginning inventory for the second quarter is 110. That's the number that was on hand at the end of the first quarter. For the third quarter, it would be 120, and for the fourth quarter, it would be 130. Now we subtract that beginning inventory from total tablets needed to get the number of tablets to be produced. So for the first quarter, we would need to produce 410 tablets. 200 minus 610 is 410. We would do that for the second, third, and fourth quarters. Now we need to talk about the total column. The first line in the total column is budgeted tablets to be sold. We would get that number from the sales budget, but it is equal to the budgeted tablets to be sold for the first, second, third, and fourth quarter. You could add those together and it would equal 2,300. But notice the desired ending inventory comes from the fourth quarter, not the total of all 4 quarters. Just take the desired ending inventory for the fourth quarter, 140, and we add that to the total tablets to be produced, and we get total tablets needed of 2,440. Now notice, for the beginning inventory, we go all the way back to the first quarter. The 200 tablets that were on hand at the beginning of the first quarter that would be given to you in the problem, and we take that to the total column. We take 200 and subtract it from 2,440 to get the budgeted tablets to be produced of 2,240. Now you can add the budgeted tablets to be produced in the first, second, third, and fourth quarters, and you will still get 2,240 that's in the total column. Now we're going to talk about how to prepare the direct materials budget. After the production budget has been completed, Smart Touch Learning needs to know how much of the materials they need to purchase in order to be able to meet the company's production needs. After they determine the amount of the direct materials, they're going to multiply that by the amount that the direct materials cost to get the budgeted cost of direct materials purchases. So let's look at this slide to see how you calculate the budgeted cost of direct materials purchases. First, you start out with the budgeted tablets to be produced. That comes from the production budget that we just completed. Then we have to multiply that number of tablets to be produced by the amount of direct materials needed per tablet. In this case, it's pounds. We take the number of pounds per tablet, multiply it by the number of tablets to be produced to get the total direct materials needed for production. Then we are going to calculate again desired direct materials in ending inventory using a calculation similar to the production budget to get total direct materials needed. Subtract the beginning inventory that's already in direct materials, and then that will give us the budgeted amount or purchases of direct materials. We multiply that by the cost of the direct materials, in this case per pound, and that gives us budgeted cost of direct materials purchases. This slide shows how you would calculate the desired ending inventory for raw materials. Remember, we start out with the production. So in the first quarter, we need to produce, based on the production budget, 560 tablets. The problem will tell you how many or what pounds you need per tablet. In this case, we need 3 pounds of direct materials for each tablet. So we multiply the number of pounds times the tablets, and we multiply that by the percentage of inventory we need on hand for the next quarter. In this case, the management feels like we need 40% of the next quarter's budgeted direct materials on hand. So multiplying the 560 tablets by 3 pounds per tablet by 40%, we get the desired ending inventory for the first quarter of 672 pounds. We would do the same thing for the second quarter using the third quarter's production. And for the third quarter, we would use the fourth quarter's production. For the fourth quarter, we would either have to know the first quarter of 2028 as we did for the production budget, or in this case, the problem is just giving us the amount of pounds as 852. This slide shows the completed direct materials budget. So we're going to look at how we would complete the direct materials budget. Remember, the budgeted tablets to be produced will be from the production budget that we just completed. We have to do the production budget first. Then we multiply the number of tablets to be produced by the pounds per tablet. And that was given to us in the problem as 3 pounds. That gives us our direct materials needed for production. So in the first quarter, we're going to produce 410 tablets. We need 3 pounds per tablet. So we need 1,230 pounds of direct materials. The next step is to calculate that desired ending inventory. Remember, they want to have on hand 40% of the direct materials needed for the next quarter. So for the first quarter, we would take the second quarter direct materials needed of 1,680 pounds, multiply it by 40%, and we get 672 pounds. For the second quarter, we take the third quarter's pounds of 1,830, multiply that by 40%, and we get 732 pounds. For the third quarter, we take the fourth quarter's pounds, 1,980, multiply it by 40%, and we get 792 pounds. And the 852 pounds for the fourth quarter was given to us in the problem. Then we add the desired ending inventory to the direct materials needed for production to get direct materials needed. So in the first quarter, we would add 1,230 pounds to the 672 pounds in ending inventory to get total direct materials needed of 1,902 pounds, and we would do that for the second, third, and fourth quarters. Then we have to subtract the direct materials that we already have on hand at the beginning of the quarter. Remember, for the first quarter, that amount will have to be given to you. So the 600 pounds for the first quarter would have to be told to you in the problem. But after the first quarter, we take the ending inventory for the previous quarter. So for the second quarter, the beginning inventory would be 672 pounds, which we would get right here from the first quarter. For the third quarter, we would take the ending inventory for the second quarter, 732 pounds, and for the fourth quarter, we would take the ending inventory for the third quarter, 792 pounds. We subtract these beginning inventory balances to get the budgeted purchases. So for the first quarter, we would take 600 pounds and subtract it from 1,902 pounds, and we would get budgeted purchases of 1,302 pounds, and we would do that for the second, third, and fourth quarter. Now we would need to get the actual cost of the purchases by multiplying the number of pounds that we need to buy by the cost per pound. That would be given to you in the problem. The cost per pound is $50. So to determine the budgeted cost of the direct materials purchases, we multiply $50 times the number of pounds we need to purchase, 1,302, and we get $65,100 in budgeted cost of direct materials purchases. We would do the same thing for the second, third, and fourth quarters. Now let's look at the total column for the direct materials budget. Again, the beginning line, budgeted sales to be produced, that total would come from the production budget, but it's also equal to the first, second, third, and fourth quarters budgeted tablets to be produced. We multiply that by the number of pounds we need per tablet to get the total direct materials needed for production of 6,720 pounds. Then we're going to need to add to that the amount that we need in the ending inventory, but only for the fourth quarter. Remember, you do not add the total, you don't add all of these together, you just take the amount from the fourth quarter, 852 pounds, add it to the 6,720, and we get the total pounds of 7,572. Now, for the beginning inventory, you go all the way back and take the beginning inventory for the first quarter, just like we did in the production budget. take that $600 and we're going to subtract that from the 7,572 to get the total direct materials in pounds of 6,972. We multiply that by $50 per pound and we get the total for the budgeted cost of direct materials purchases for the year of $348,600. We could also add the totals for the first, second, third, and fourth quarter, and that would give us the same amount. And that is the conclusion for part 1 of Learning Objective 3.